start right away. All right. Look at the S&P 500. This is just a live look. It's kind of negative today. We don't have anything crazy going on like options expiration today. It's just, yeah, so we're going to draw our lines just because we have the ability to do this. Next. Okay, so this is our line. Okay, we've actually gone under our little line here. So we have an uptrend there, and then we have this downtrend. All right, that's what it looks like right now. So this was we were expecting it to be a little positive going into the holiday, which is one of our simple rules. The market is happy around the holidays because there's lower volume and there is people that are taking time off. So, but with low volume, you can have it work both ways. You could take advantage of it and move the markets up or down. All right, so.
But you've also been telling us that September is a down month. So
it is a down month. So on average, let's see at this. No, we can't see. There's a guy named Dan Niles. He mentioned he did some research about September, and the average amount of time it's down is 44% of the time. It's not positive; it's negative. Average amount of time. The average amount of loss for September, it's the worst month of the year, is around 0.9%. And if it's negative up until July, there's only a 17% chance of being positive. Otherwise, 44% chance of being positive. So it's historically a bad month of the year. So let's look at our months. Okay, there it is. September is for this 1980 to 2018, 0.7. So big problem with September is there's no earnings announcements. It's really a dull month, very low trading volume, and not a lot of catalysts. So we weren't expecting that much going into this month. All right, so we can see from past, whenever you look at the S&P, you look at past levels of support. There's a level of support, there's a level of support, there's a level of support. So what has been support in the past is usually support going forward. And if there's, this is resistance, it didn't go higher than this. So that becomes support if we end up, and it's, well, we might get to, okay, so anyway, that being said, let's go look at the extended change of pace. We're going to look at the top performers in the stock market, up and down, and see if we have any patterns. Okay, there was, oil is obviously up. Let's look at its pre-market screen. Tells us the price of all the commodities. So crude is up 1.6%, 1.36%. So that's probably why we have a lot of the oil stocks up. But there's been talk about a price cap on Russian oil, and that could be manipulating this the oil stocks. You see, but it's all oil stocks in the top 10. Let's look at the bottom. And we see tech, we see Tesla, we see Meta, we see Generac, Starbucks. Okay, Starbucks has a new CEO, so maybe people a little cautious about that. And 3M. 3M is the. God, no, I'm sorry.
Yeah, I guess I think of like Generac and 3M as like kind of construction-related businesses, or maybe not.
Yeah, 3M's a back conglomerate. Yeah, they make a lot of business like materials. They do a lot of manufacturing and businesses, but what their biggest problem right now. This has been a blue chip forever. Like a industrial. I guess you can call it industrial, but 3M is actually in some serious problems.
Is it because of like the office, like then like people like not as many people going to the office all the time?
No, it's because they have a lawsuit against them. Like how many 200 million people were using their hearing protection in the army, and that was faulty. So there could be a judgment up to the billions. So they might even have to go bankrupt because of this. And so no one knows, what the extent they've been trying to manipulate this to try to make a spin-off to take all the liabilities, and that was just denied. So this could be a company that goes bankrupt. And so now I guess that's look at this slide. It's like 20%, 30%. So who knows what's going to happen there? That's very similar to Johnson & Johnson with their talc powder. I don't know how they did it, but they spun on their maybe a couple $1 billion into a fund, and they said, well, that's our bankruptcy fund. But the company can continue. They split into three, and I don't know how they smoke and mirror that situation, but they might get out of it. But 3M tried to do the same thing, but they couldn't. And this is an example of a blue chip stock that pays a dividend. You think you could buy and hold it forever, but this could be something that they're at a COVID low now. Yeah, look at that. They're at a COVID low, very close. So they're going to have to lawyer their way out of that situation. That's probably why they're down today. No one knows the extent of how much they're going to owe for that. Other stocks that are going down. ADP. ADP, that's interesting because there was a good jobs report today, and they make money based on how much payroll processing. I don't know why that would be down 2%. AMD, they're down with NVIDIA because there's the government of the United States is limiting superpowered chips to China and Russia. So it looks like they're going to take a big hit because they can't export certain kind of chips to China. So that's why they're down today. And all the chips go down in sympathy because they might have similar issues. Let me see. So look at some of these other ones. Lululemon, they had a good earnings report. We were just looking at that industry 2 weeks ago. Let's see. That's interesting because all the specialty retailers are down a lot. And all the clothing manufacturers we were looking at last week, the luxury clothing manufacturer. Let's see. It's going down. Charter and Comcast, they're both internet providers. Paychecks. Okay, so I guess there was a payroll issue. I don't know what it was, but both Paychecks and ADP are down. Probably because of that job report. I don't know why, but anyways, the job report came out, and that showed that there was strong job creation, and that shows the economy is good and still doing good. But that could be more reason for the Fed to keep up its interest rate issues. That could be why that's good news for the economy, bad news because that might make the Fed act more. So let's look at other things going on. These are all very conservative stocks. These are the ones that are usually in this environment doing well, but now these are all dividend-paying stocks that are healthcare and see the ones that are doing better are. I can't find the thing. Okay, those are good to check. Always good to do that. Look at what's going on in the day. Okay, so looking back at the S&P 500, S&P 500 again. Okay, so we looked at the charts. We just drew the charts right now, and we can see we had this uptrend, and almost basically broke out of that right there, that uptrend. So now we're in this lower highs, lower lows, little pattern here. So the next stop is either here or we bounce along the line here, or we end up going up to the top of this channel line. So we don't know what's going to happen next. We just have an unprecedented situation of money coming out of the system here. So anything can happen. You can drop like a rock, or we could go up to the top of the channel. We don't know. But for me, what I do is I believe in stocks. It's like you like a horse in the race, and you're betting on that horse, and you believe in the horse. And I believe in certain stocks, and you have to go with them in good times and bad. So this is a badder time, but again, let's look at what's going on in the our calendar. Okay, we were thinking it might be bad, until Labor Day, and because we were pretty much oversold, and we didn't have any news coming out that was good, and so we expected, people to be excited to be off, and people have good feelings around Labor Day, and the Apple will have their developer conference where they're revealing the new Apple device, maybe iPhone 14, and if they put together something like a foldable $2,400 phone, that would be super good for all the tech industry, but we don't know what's going to happen there, but that's going to be a catalyst for stock market going up. We're already in oversold right now. We're basically max oversold. So that's why we're thinking next week might have a little bounce up. We're looking forward to the Fed meeting on the 20th, and Fed could indicate one way or another whether they're going to raise more or less. And having a finite understanding of what's going on with the Fed is going to help the market a lot. So right now we don't know. And then we have end of quarter wind address. So at the end of the month, every quarter, there's a buying of the best performing stocks in a quarter. So after that, we have October, which is traditionally a scary month for investors, and then we look forward to the end of the month, end of the year. There's usually good vibes around the holidays, and there's end of year pension funding, IRA funding, etc. So, all right, those are big pictures. So we're super oversold right now. The S&P is down 3%, maybe 3.5% since the last meeting. And the interesting thing to keep our eyes on is the 10-year. Let's look at the 10-year right now. Oh, man. All right, how'd I get stuck on that? All right, I'm not a refund.
That's fun.
Okay. Okay, so the Treasury is going up. You can see now we've gone up a couple, like 7% since the last meeting. That is, we have to keep our eyes on this. If this continues to go up, that means the Fed has to continue to raise the rates. The Fed always follows the U.S. Treasury and 10-year Treasury. So that's why this is so important. If this continues, let's say it's up to 4% in a week, then the Fed will have to raise another point on top of whatever they're raising now. So this is really bad for our growth stocks that we're following, because we have that rule. It's been working so far. That as the rates go up, it makes it harder for growth companies to fund their operations, and that is our theory, and it's been working so far. Okay, so here's the comment that I just made: is Fed never fights market rates, and as that 10-year goes up, and interest rates will go up with that. So let's hope it holds around 3.2. Now, there's a new law that says buybacks taxed at 1% starting January 1st. That's the new law that was passed for the not Build Back.
The Inflation Reduction Act.
Yes, I call it Build Back Smaller. And that Inflation Reduction Act has something that there's corporate tax problems, and that they're going to tax corporations at 15% minimum. That's bad for companies like Apple, and there's buybacks they're taxing. So what that means for us is, when we're looking at our calendar, we not only have, this end of the year, quarter end, year-end winter dressing, Santa round, we have Fed meets, and we have all these companies rushing in to buy back stock before that 1% is charged. And that goes into effect January 1st. So I'm just looking at the catalysts, catalysts for markets to go up. That's a pretty big catalyst. You have a lot of companies rushing in to get their buybacks done. So let's keep our eyes on that. And the tentative Fed statements, they still haven't said what. Maybe September 20th we'll get more information on that. Good earnings announcements. We had a warning from NVIDIA this week. We'll go over this later on, but NVIDIA said they can't export a certain amount of chips now that there are rules. Some of their advanced chips, and AMD has that same problem. They can't export into China or Russia, and that's like a $400 million hit to their earnings. So let me see. There was another article we found regarding any progress with ending Ukraine war. Russian Federation will run out of shells, artillery, and armored vehicles by the end of the year. That was amazing. I read that. So that could be an indication that they might run out of, if the war might be over at the end of the year if they can't replenish their stocks. We don't know, but okay. So let's see. We had good news on the inflation. There's several people like Jeremy Siegel. He's like a professor at Wharton Finance. He said the inflation is dropping, and this guy from Morgan Stanley, I'll go over that later. He said inflation is dropping. And the components of the inflation are dropping like a rock, he said. So, let's see. And we have an oversold market right now. So these are all indications that the market, has some reasons to go up. So some reasons for the market to go down is that 10-year, it's going up 7% a week now, and that's pretty bad. bad. You see. So right now, the companies that don't have earnings are still being squashed. The companies that they're unprofitable. So that's why we're focusing on the companies with low PE ratios and PEG ratios around 1 or less. So that hasn't changed. Let me see. Okay, so let's look at our three major variables. And oil is down 5%. That's usually a sign that the economy is getting weaker around the world. Matthew just brought to my attention that there's a drop in China that's affecting a lot of things. So if there's a drop in China, the things that are affected, they don't use as much oil because their activities are less. They have they generate a lot of electricity from hydroelectric powered. They don't have rivers generating their electricity. They got to burn coal. And anyways, they're having rolling blackouts, so they might not make as many iPhones. They might not be as productive. They might not export as much, and that means they might not use as much oil too. So that's probably why the price of oil is going down. We don't know. That's one of the reasons. And we also know that they're trying to cap the amount that the G7 said they're trying to cap the amount that the countries could pay for Russian oil. That could cause the price of oil to go up or down. And like I said, the Treasury is up 7% this week, and that's really bad for the general stock market. And for inflation, I have put a little chart here for inflation over time for the past couple of years. It was almost nothing during the pandemic. It was 0, 1%. Last year, it was creeping up, and it peaked around June. You can see that it was 9% around June, and now it's starting to go down. It's 8.5, and every month we'll get a different reading. So hopefully we have a trend that's starting to go lower and lower every month. And I think the market looks at trends rather than just the number. So if we keep trending lower, that's good for the stock market. So if it goes from 8.5 to 8.2 to 8 to 7, then we have this, a pattern that's going down, and the market likes that kind of uncertainty. All right, so let's look at the sectors that are doing good and bad. We know the oil stocks are doing good, so let's go to percent change. Okay, biotech is doing the worst. Retail is doing the worst. Healthcare, tech. That's what's doing good. Gold miners, oil, energy, renewable energy to be up. I don't know why gold is up. All right, and that's all we can tell from this. So this could be because of that 10-year Treasury. Let's look at that. It's down. No. Okay. So when the 10-year Treasury is elevated, that's bad for tech, and it's good for banks. There's financials, and all right. So that's a good exercise. Glad we did that. Okay, so we're in a downtrend in the stock market, and we have this lower highs, lower lows. We're still on this channel. We're basically, at a support level from way back in July or June. Let's look at. We already mentioned this. We're up a pretty high level in the 10-year. Fear greed index. We hit fear, so people are starting to get fearful, and that's exactly when as an investor, if you're not invested, this is the time to start dollar costing. We have stochastics for everything we're following is down to the maximum. This is 5. 5 in the low stochastics is usually, pretty low. And we also have the S&P oscillator at -8, which is super oversold. So this is a combination where we're oversold, people fearful. That's when basically do the opposite of what everyone else is doing. All right, so and we probably, I don't know, we might get to extreme fear. But right now the VIX is going up. But if we have this same correlation, I put a little chart together here. Just I didn't find this anywhere. I just noticed this. Whenever 15 to 20, when the VIX is at 10 to 15, that's like a bull market, and people are not afraid. And there's a lot of complacency in the market. Then 15 to 20, we're climbing a wall of worry. Then fear starts creeping the market like it is right now. Whenever the VIX gets up to 30, that's extreme fear. That's like right here. These are the turning points in the market. These are like super sell-offs. And people get, then the panic is when the VIX gets up to 50, which we had during the COVID times. So it's an inverse correlation to the stock market. All right, so I did that map what we did today, just right now. Yeah, pretty similar. Okay, so we have this downward channel, this little. So until further notice, we're gonna be hitting this lower highs, lower lows until we break out of that. We know at the end of the year we'll probably be hitting the top of one of these channels or going past that. But until then, we might hit lower highs and lower lows. We'll see. Okay, there's an article, Kramer's favorite market indicator, how we incorporate it into trading decisions. We look at this. We have a Yahoo Finance short-term oscillator. Right. Okay. We have our own little. This is the Yahoo Finance oscillator, and we know when it gets to a 5, which it is right now. That's super oversold. But Jim Cramer has this S&P 500 short range oscillator. He says it's now 8.86, and he says anything above 4% means the market is overbought. Anything below -5 means it's oversold. So right now, he says, when it gets down to around 9, it's time to hold your nose and buy something. He said that's what he was taught to do when he was in Goldman Sachs. All right. So I mentioned this earlier that U.S. is banning sales of high-powered chips to China, and NVIDIA went down a lot on that this week. So they had to reduce their sales forecasts. And let's see. All right, yeah, I think I already talked about this. Here's an article from this Tom Lee from, what is it? What's it that we need this? Fundstrat, Tom Lee. He says it's inflation is starting to drop like a rock. He says if inflation cools and is less sticky than most people expect, then they're not going to raise the rates as much. So he looked at the components of inflation, the gasoline number, and they're all basically falling. And he thinks it's not going to be as sticky. So we checked this off on our list, of things. Where is it? Right here. Inflation is going to drop like a rock. And that's a pretty. This guy's like featured on CNBC all the time, so he's pretty smart. So he has this list of, I think it's 50 items that make up inflation. So a lot of them are going down. So it looks like this inflation thing could be resolved by the end of the year, maybe. So we're going to look at this inflation rate, and hopefully by the end of the year it'll go down to maybe 3 or 4 again, like it was, like maybe 2 or 3%. That's the Fed target rate. If it goes down to that, then the Fed's done what they're doing. They're pretty much done raising rates. Okay, so now that's the big picture. This other thing I mentioned was there's another article that said we're running out of shells, artillery, and armored vehicles. Some of the things they're using for firing missiles are wearing out, and it needs maintenance. They can't do that maintenance, so they got to find some way to get replenished, or they might have to end. That's really bullish for the stock market if that ends up happening. So keep our eyes on these little articles as they come up. All right. So this article by JP Morgan, and they said there's a reliable contrarian indicator points to 11% stock market surge. So, they said the jobless claims jumped 10% above the previous 3-month average. Every time in history this happened, the economy eventually entered into recession, and this has been a super reliable indicator, they say. So they said the good news is whenever this indicator goes up, the S&P returns 11% for the next 12 months. We've had a couple articles like this where people see coincidences where if it goes down 20%, to start a year, and be positive the next year after that. So, so for me, I'm like a crema bowl. I'm always all in, and you have to deal with the good and the bad. I think Charlie Munger said, to be a good investor, you have to be able to hold in the bad environments. That's what makes a grown-up investor. So let me see. Another thing that they mentioned in this article, the same article, they said they like Apple. They said, $1,600 for phone is pretty expensive, but they love splurging on their products anyways. And they have this active installed base of 1.65 billion devices. And they're generating the recurring revenue from that with their services, and they have the ecosystem. So these are all reasons that Apple will continue to have steady growth over time, but it's not a lot of growth. I just looked at the numbers for Apple. They're only growing at 5% for the next couple of years, and well, that might not seem to be a lot, but they upgrade their product offerings every 6 years or so. So they'll have a new thing to sell in a couple of years. That's what Apple, show you what I was looking at. But for all the things that I'm holding long term, you got to do this. You got to be. Jim Cramer says, buy and homework. You have to buy and then do your homework to make sure it's still what you think it is. So this earnings estimate for the next couple of years is around 5 to 6%. This last year, between 24 and 25, it's 12%. So it's not growing a whole lot right now, and its PE ratio is around 28 right now, 25. It's been as low as 15, and back 10 years ago it was a PE of like 10. But that's traditionally a lot to pay for a stock that's only grown 5%, 7%. But it's consistent. That's the one thing about this company, it's consistently growing. So you see. So as inflation spikes Apple passes on higher costs to its global consumer base. And so they increase their price of their items as inflation goes up, and they'll sell less, but they'll still make the same. So the September 7th is their hosting event, and they probably unveil another iPhone. And this analyst has a price target of 200. So let's see if that ever comes to be. You see. Okay, let's look at our investor emotional graph. Okay, so right now, let's look at the S&P 500. Okay, so the emotional graph is you have a lot of people that bought up here that, they bought it and they're like, wow, this is going down. There's people on TV saying that it'll go down. And let's say I think we're right here. We haven't been into a despair time where people are selling off and the VIX is up to 50 and stuff like that since the pandemic. So right now we're trying to return to normal. We've got this uptrend, and I'm thinking we have a chance of going down to this really despair time with a big crash because we have this lack of liquidity in the market, and the amount, we have how many trillion being pulled from the market by the Fed. I don't know what's going to happen. For me, I'm going to be holding my stocks because I know over time, this is just a blip in the chart. But look at this. It is a 6. So the stochastics is pretty much as oversold as you can get. And if we look back at the COVID, right there, we're basically at a very similar level. For the worst of the COVID crisis, we were at like a 1 and oversold. So we're oversold, we're super oversold. And we do have the end of the year to look forward to. Right. So we already mentioned that. Okay, so we're going to look at Jim Cramer was talking about a stock yesterday. It was called. Does anyone have any questions? Okay. All right. He was talking about a stock called Signet Jewelers. They basically own most of the mall stores to buy rings. So they've been going down a lot during the pandemic. Revenue. No. Okay, during the pandemic, they couldn't make any sales, so you can see that their stock went down to like $10 a share. And now that in the past year since the pandemic, this year has been like a super wedding year, where there's more weddings this year than ever because of the pent up demand for the pandemic. But this company has a PE of 5. Let me see. Let's look at this company. They had a couple problems with management acting badly, and they got fired. You look at this; they're actually approaching yearly lows. Back whenever people couldn't have weddings, back in the pandemic, it was $6 a share. Can you believe that? Wow. There are some people that say some of the best purchases that you can make, or whatever, a company's almost ready to go into bankruptcy. Like Tesla was like that. They were almost in bankruptcy, but they had an addressable market, and they ended up getting out of that. But if you would have bought it back then, you'd be doing really good now. So I'm going to start looking for stocks like that. But like there's some of the EV charging stocks are like that now. They're not profitable, and without funding, they'll go bankrupt. But yeah, they do have a potential market that's really big. So, but right now, I looked at the numbers here. It's not that great. The earnings estimates aren't that great. So let's see, 7.9. It's growing at 2.5% between this year and next year. That's very limited information for only 1 year in advance. And let's look at the statistics. So they're growing at 2.5%, and their PE is 4 PE is 6. So that's like the PEG ratio is 2. So they're 2 times overvalued. And you see, and they're retail. So you have a lot of retailers now that have a lot of inventory that they're trying to get rid of, and a lot of retail stocks are going down. So I don't know. I wouldn't want to get into this. It doesn't seem like it's consistent that they didn't perform well during the pandemic, and I don't know. It's not as a solid investment as maybe some of the higher market cap tech stocks we're looking at. Okay, so let's look at the stock market. What's going on now? Okay, so let's look at this. Is there any questions anyone have? Looking for getting things slow. Come on. Click on this. This is where you want to go. Okay, we're going to stop that. Okay, I'm going to look at the stochastics. Okay, we're going to go back and look at stochastics for every one of the indexes we're following has a similar trajectory. We're pretty much in this downturn of lower highs, lower lows. And what I did is I mapped out support levels from the past. So we have a support level like 1% below where we are right now, 1 or 2%. And then this is the June lows, June 20. So, if we end up going into these downturns, these are going to be levels of support that we hit. And there's a certain amount of support there before we go up and we go down. And if we end up going down to this lows, there's a certain level of support down here for that. So let's look at all the different. Okay. We have S&P, we have Invesco, QQQ, very similar to S&P. This technology scene, XLY, we have a similar downtrend. But you can see that in every one of these, we still have a 50-day and 100-day that's turning positive. So we end up having these 50, 100, and 200 days going positive, and we start breaking out over the 200-day moving average. That is very positive. And then we have a majority of the stocks over the 200-day moving average. Then we know we're back into this higher highs, higher lows situation. Okay, so let's go back. Materials, okay. Look at the healthcare stuck in this range here. We have industrials starting to go into downtrend, but we have these moving averages that are kind of support. You see XLP, same thing, same as the healthcare, we're in a trading pattern. Every one of these sectors is max oversold. That doesn't mean we can go lower. It just means that we're oversold, usually that indicates it's time to buy if you're not invested. Utilities are basically super overpriced right now compared to history. They're like trading much higher valuations. So it's super, I guess there's a lot of people gravitating towards higher yield investments right now, but it's trading at a premium. So it's really hard to get into that sector right now. Let's see. This is one of the, it's an uptrend. This is a real estate sector. It's in the uptrend. Interesting. It's still oversold. And, all right, Abby, we have most of the drug stocks are in a downtrend. This is Abbott, very similar chart. And you see, Alibaba isn't going anywhere. It's just waiting for some kind of resolution to the United States delisting all these companies. See, Alphabet, it looks like it's starting an uptrend. It's at the bottom end of the range. And it's super oversold. Let's see what happens there. Altria is in almost every one of the dividend stocks we're following. They're in this trading pattern. And it's close to the oversold. Let's see. Amazon, you can see this is like an uptrend that's starting here. So lower highs, higher lows, and we're pretty much at the bottom of that range right now. Kind of similar to the S&P 500. Apple broke out of its uptrend. This was one of the strongest stocks year to date. The ones we're watching. And it broke out of this uptrend right there, starting to follow the S&P in this downtrend. But it has a lot of support in these moving averages. See, this is 50, 100 in moving averages. And if we can go above this 200-day for an extended period of time, that's really great for that stock. So let's see. AT&T. We mentioned that it's losing customers to T-Mobile. And this is very similar to Verizon's chart. My guess is it's going to continue this downward low, lower highs, lower lows, as long as it continues to lose customers. Let's see. Bristol Myers is in a trading pattern, big, like all these. And it's almost a downward pattern, like the other drug stocks. But it pays dividend. This is like all of our dividend stocks. It's kind of at the high part of its channel. It's almost oversold. TSX doesn't really have much of a pattern right now anymore. I guess it's, I guess you can say it's not trading in that range. That is not doing anything. There are people that said today that Mark Zuckerberg is basically losing his touch, and people are losing interest in this metaverse. So this big bet on the metaverse might fall flat. That would be bad for the company, but they're still profitable, and they're still making money with Facebook if that doesn't come about. Let's see. PepsiCo is one of the strongest stocks we're following. It's still in the trading pattern here, but they're able to raise their prices, and they're above their moving averages, 100-day, 200-day moving averages. So, and they're oversold. So, that's an example of stock that would be safe to invest in this kind of environment. Let's see, Procter & Gamble. This is at the low end of its trading range. It goes back a year now, and it's oversold. Let me see. Starbucks, they just got a new CEO. That might be a catalyst for people being interested in this company. It's oversold. And let's see. Nothing exciting about the Verizon. This follows our pattern. Lower highs, lower lows. They're losing customers. They don't have as good a technology as the T-Mobile. So, I don't know. Looks like the next stops are here and here. based on what we see. And Visa is stuck in this trading range for, a year and a half now. It's oversold. And Waste Management, probably one of the strongest stocks we're following this year, because it has pretty much elastic demand. They have good visibility, and people make the same amount of trash in good times and bad, it seems. But the economy's doing better than they have more trash business. So, see, Amgen, this is basically flat compared to the other drug stocks, which are down. And the CVS is trading like a dividend-paying stock we're following. It's almost every one of the stocks we're following is oversold. Johnson & Johnson is in a downtrend, like the other drug stocks. Walmart seems like it's stuck in this trading range right here. I guess there could be, if it drops again, it'll probably drop to this level right there. Supply is stuck in the trading range. And Berkshire Hathaway starting to make this up channel, going up, low, higher highs, higher lows. And I guess a good thing about Berkshire Hathaway, most of their business is in America. So they're like Verizon, they're mostly Americans. They don't have to worry about foreign exchange fees and that hurting their business like others right now. MasterCard, it is like Visa, stuck in the trading range. It's almost at the bottom of that trading range. If it gets down to here, that would be a good time to buy it. And eBay, kind of stuck right now in this range. It's not going anywhere. And Boeing is starting to get an uptrend. And it's at lower end with Boeing Stochastics. And that's what this split didn't really help that much. The stock is oversold. It's the bottom end of its range. And NVIDIA, it just broke out of its, it looks like, it's been in this trading range for like 3 months or so. And it looks like it's broke out of that to go down a little further. There's a lot of uncertainty with NVIDIA, with it not being able to sell certain chips to China. So they got to lose money because of that. Nike, it's kind of stuck in this trading range, like a dividend stock right now. And Ford is, there's a level of resistance right there. It doesn't look like it's going to go over that without some kind of good news coming out. And I like to follow this just to show what can happen to a stock that seemingly high growth in this environment. It doesn't have a whole lot of all the numbers filled in. So right now it's just kind of floundering around. Pfizer is a stock we're following that's in an uptrend. It is taking higher highs, higher lows, and it's on the bottom end of the range. Costco. This is a stock that is doing good because in bad times, it people go there to save money on bulk, and they have a consistent 90% of their money they make is from fees to join the club. And Walmart just increased the prices to Sam's Club with a very good chance of Costco increasing their prices, because they usually do it whenever Sam's Club increases their prices. So that could be a catalyst for it to go up here.
I wonder if the inflation is affecting people's shopping habits for like going to Aldi or a club like this versus a grocery store or a local grocery store. There's been people reevaluate their behavior based on increasing prices.
Would they buy more huge bulk items, or would they scale back and buy ramen noodles at Aldi? I don't know. We'll find out. That's interesting. So we know that. Oh, I'm sorry.
Yeah, no. It just seems like this is a time when behaviors can change, right? That people get set in their ways with shopping, kind of, and if they all of a sudden have higher bills, they're spending more, they might be looking at where they're shopping and making a change in behavior that could be sticky.
Right.
And I think another thing is a supply chain issue as well, um, because if you don't have a supply, they have to raise the price to control the to control so that it's not, people don't take it in too much bulk. So that's another thing. Um, Also, price increase has affected the slowdown of things going out of grocery. I don't think so. People are still buying. They still have money. So, yeah, I don't think so. Like, this inflation is. Yeah, people do see that, hey, the inflation has gone up, prices have gone up, but yeah, still there is a huge line at the gas station. If you go, people are still buying. They don't have issue paying $4, $4.50 for the gas or anything you buy. You think yourself, do you have? We say, oh my God, this price was expensive. It is expensive, but you still buy it. You just don't say like, oh no, you know what, I won't buy it this time.
So Costco also has a tailwind from their gas sales. So as the prices of gas, goes up, people are going to go get their gas at the Costco because it's 10 cents or 20 cents lower than everywhere else. So they have people going in to shop, so they have a little tailwind from the gas prices and inflation of that helps them out some.
Correct, yeah. But I'm saying that inflation right now, the way, and we know the inflation is high, but and the prices of every commodity or everything that you buy has gone up, but I'm not sure it has stopped people from buying stuff. People are still buying it, whatever price it is for. So yeah, and I think inflation is here to stay. It's not gonna go. I think people have accepted. Hey, $3 is it's not been. We won't see $2 gas price anytime soon. I think $3 is $3 going to be standard, and I think that's what we have. It's a new price that everybody had to accept. Unless everybody drives Tesla. Yeah.
Right. So this is kind of the big question we're trying to figure out. This Tom Lee guy, and he thinks that it was just a temporary thing. They were saying last December, the Fed was saying this is only temporary. The inflation is temporary, and it very well may be that we saw lumber prices drop. All these things that seemed like they were out of control, get back to a normal, and we see the gas prices going back to normal, and it's it seems like it's heading in the right direction. But that's like the $1 million question we gotta keep our eyes on, and but if it does stay elevated, then that's going to cool down the economy and that'll make the profit for all these companies we're following go down. So,
yeah, true. The prices are going down, but I'm saying with the prices going up, there was no change no change that people are still buying it. People are buying stuff even though the prices are up.
Yeah, no change in demand. Usually, people buy less.
Exactly. I think it's problem. The problem is the supply bottleneck. The bottleneck is that where there's not enough supply or enough material to produce things, and that's why. Like simple example, Tesla don't have enough. They are not producing enough cars, so they raise the price, but people are still buying it.
part of it is the debt's going up, right? I think that people are taking credit card debt, and so we'll see how long that can keep going.
Oh yeah.
Yeah.
All right.
Until
But
Yeah,
I'm sorry.
until they start charging us 100% tax. Until then, they'll keep.
Man.
Exactly.
Right.
It's because all this burden is going to come on us, like waiving off student loans. I was reading the article today that it is going to be a burden of 2,500 on all of us, on a normal person who is making, who is salary person, normal salary person who are paying taxes. So, and then increasing interest rate is not going to help enough. It is helping, but I think there is some what you call there's it's scaled down now. It's not gonna. I think it is to a point where you increase it, it's not gonna make much difference.
Right. Right. All right. Well, I think I've exceeded my time for today.
Yep.
So thank you all for attending. I appreciate it, and I hope you have a good weekend.
Hey, you too. Have a nice long weekend, guys.
Yeah, good holiday too.
Yeah. Hey guys.
Thank you.
Thank you.
Thank you.
Bye.
All right.
Bye.
See you next time.